Right now, we want to start with Guy. Netflix is up 50%, as you all know, from December lows. And right now, we're giving back just a little bit in the after-hour session, not too much, down 2.8%.
The international sub growth is ridiculously good. I mean, it's strong, and it's been strong for quite some time. Yeah, maybe a couple quarters ago it missed, but it's been pretty consistent, moving from the lower left to the upper right in terms of international sub growth. You got to admire that. But it's not unlike last quarter, where you had a very strong quarter after stock that's rallied a significant amount, and then it sold off. And I think that's what you're going to see here. I'm actually surprised it's not down more than it is. Now, will this sort of be a bellwether? It sort of augurs well or poorly for the market going forward? Maybe, because if you remember, when Netflix reported last quarter, you had the knee-jerk higher. Stock started trading lower over the next couple of days, and within a few weeks, the market followed. I think you might start to see very similar in the weeks to come.
What is striking is that the stock, as we mentioned at the top, is up 50% from the lows. And it's only down 2.8%.
Look, this is an amazing show by the stock, very resilient, especially a stock that in absolute terms moves 6 or 7% every time they report. So when you consider that we traded, and without, I'll leave to the technical guys, I'll just tell you that this stock was as overbought going into these numbers as we'd seen. There's two other times when the stock's had an RSI of over 80, and you've then corrected 15 to 20%. It hasn't been a disaster, but it just tells you this stock tends to get ahead of itself. As someone who's been critical about this company of the valuation, I have to say, if you're disappointed on a slightly lower bottom line because they're spending more and spending costs are up, the whole reason this stock seems to be doing what it's doing is they're spending tons of money on content, and people believe that they're competing, and they don't really care about short-term profitability. So I'm acknowledging that to poo-poo this stock based upon these numbers would be inconsistent with what's been allowing this stock to outperform.
Yeah, and then obviously, Tim, you cannot poo-poo the fact that they're putting through this price increase.
I don't poo-poo anything.
No, but if you think about it, let's just say they have 60 million or so U.S. subs here. They're raising prices by 15%. You do the math, that's an incremental $1 billion that just drops right to that bottom line. So that is actually the most important thing that happened to this company this week. And we're going to know in 3 months if they have churn because of that price increase, and that will be part of the bear story. But in the meantime, if you're a bull, you can be hopeful for the fact that they're able to raise prices like this, and it's all incremental. It drops to the bottom line. It helps them offset that negative free cash flow they have from that content spend.
Right, so it gets to exactly what you're saying. Is there an operating margin that they could actually reach, right? Even though they may get there, they very well may. I still, just on valuation, I couldn't own it. It's too expensive when we don't know what impact there's going to be from considerable competition that is really only just, it hasn't even really begun yet. So
Can I ask a question on valuation? Because what I think is interesting about this company is relative to itself, it's actually cheaper than it's ever been. So because they're earning out of it. So does that matter to you on a delta to a valuation that was awful when you look at stocks?
It matters just because it's something more astronomical at a prior point. I mean, it gives me not really much of a fundamental sort of floor to. They're moving along in the right direction. I have to say, at every turn over the last several years, they've been able to do things that I've been surprised. The most important one being switching to content. I thought, no way could a movie delivery company become a content behemoth, and yet they've done an extraordinary job doing that. So I've never been in it, missed the whole thing.
I mean, look at the most recent Bird Box, right? How much are they? Less than a Hollywood movie. They've gotten 45 million.
Bird Box.
Bird Box.
I mean,
you're obviously
put a blindfold on. It's like what I do on the show every night.
Bullock.
Pretty much.
There's a clip.
Of course.
Wow. Refresh your memory here. 45 million.
I had no idea what Bird Box was.
Less than the price of a Hollywood movie.
This is what's really important if you're a bear on the notion that they spent $10 billion on original content. They're going to spend 13, 14, maybe 15 billion this year. Is that original content makes up less than 10% of their entire catalog. And the big thing about 2019, excluding the price increase, is the fact that Disney's already told you they're going to take off their best content off of it. Time Warner, HBO, is basically going to do the same thing. So you have all these streaming systems. So over the next year, they're going to be more reliant on that spend to keep people there. And that's when you may see churn start to ramp up, especially when there's all these other competing services that consumers are spending $14, $15 a month
exactly
for.
My point. Do you think that they will be able to gain some traction?
Listen, that's been the bear story. It's one of the things that I'm cling to every once in a while when I conceive of a short idea in it, but they just seem to kind of work through it.
Yeah, they worked through it, and they might work through it again. But, you know, again, you said it. The stock's went from 250 to 350 pretty much in a straight line over the course of a month. This quarter was good. We acknowledge the sub-growth. They were rewarded for that price add on Tuesday or whatever today is a couple days ago. So that manifested itself in the stock. Now you're coming down to brass tacks. And the brass tacks is negative $3 billion free cash flow. At some point, the market cares. Again, I love the Netflix story, but, you know, they're starting to mention competition. You haven't really heard them talk about that. They're talking about it now. What does it mean? Well, you could have a 50% correction in the stock. You've seen it before. From 250 to 350 gets you to 300.
And the story is still alive.
And the story's still alive.
And that's been clear.
The interesting thing, I mean, when they mention competition, it's not just the cable providers, it's not just other streaming services. They said we compete with and lose to Fortnite more than HBO.
Right.
So the competition is a much wider net than just the other streaming services or the other channels out there. It's just a competition for the eyeballs there, and so you're getting it from the video game sector as well.
Yeah, I mean, we see that also in Facebook and whatever. They're losing screen time to Fortnite as well. I can't help but think that Fortnite, 3 months from now, will probably not have the impact. I mean,
and then there'll be something else.
Something else.
Haven't we suggested that Disney or CBS or even Apple, someone should be buying an EA or Take-Two or maybe someone we don't know about? I mean, obviously Tencent has been doing this, but the media companies, this is content. Interactive sports, you name it.
Well, listen, Niantic, remember Pokemon Go? That was like this huge thing 2 or 3 years ago.
Pokemon.
They just raised $250 million the other day. They're going to basically launch a new multiplayer game on Harry Potter. I mean, the same nerds who are Netflixing and whatever are playing Harry Potter games, and you only have 2 eyeballs, right? So, like, it's serious competition, and they're seriously funded.
I'd take
Guy, defend the nerds right now.
Thursday night is when I go home, I put my little hat on, my magic wand, and I play Harry Potter with all my friends on the line. Brilliant. It's the best thing. It's brilliant. When I say 50% correction, I want to be clear. It's not a 50% move to the downside. It would be a 50% correction of the move we've just seen from 250 to 350, which Dan Nathan gets you. $300. Thank you, Dan.
What are some outstanding questions that you all have?
Well,
this quarter.
The questions I have are fresh update on when will you be cash flow positive.
Yeah.
In other words, we thought 2018, we were guided 2018 was the year the burn was over. And by the way, does this tell you that they feel more pressure? I think we just said they do. They have to compete more on content.